Hello, traders, and welcome to the weekend update here on December 10th, 2023. So we didn't really close out any new trades this last week, so nothing has really changed on the equity curve. I think, as everyone knows, there certainly was a hit that was taken to this equity curve right here, and that is a result of the massive up move that took place in the market a couple weeks ago with some huge gaps up, and of course that played against some of our delta neutral butterfly trades we had out there. So our equity curve had been going very, very nicely for the bulk of the year. And then, of course, did hit that pullback. But, we're still above 100% year to date. And I say that because in general, we'll have on 3 to 5 trades. Those trades will be usually not more than $2,500 in maximum risk. So if you've got 5 of those on, that's $12,500 you could potentially have at risk. Again, very seldom do I carry that full load, but if I did, that would be the amount that would be out there. So, still nice return, and probably more important than that, the trades that are remaining out there at this point. Let me get back to turn my drawing tools off. These are the current trades that are open out there. So the Google wheel strategy is doing great, just under $1,000 in profit. This is going to continue to decay for the next couple of weeks. If Google stays about where it is, this should easily be up in the 1,100 or so in profit before I roll out that particular option. Right now, we are in a position of long stock and selling calls against that long stock. This particular trade will be expiring this next week. Really not much to do on this one. Just kind of let it play out. This trade right now is a no-lose trade. We have essentially locked in 15%, roughly around $400 in profit. If the market were to pull back here as we get close to expiration later this week, this could yield a much higher return, but under no circumstances in its existing configuration will it lose money. So again, that doesn't mean that I might not try to adjust this to squeak a little more out of it, but probably not. Probably will be leaving this as is to expire at a nice profit later in the week. This one may require a little bit of management. Of course, our market has ripped up considerably. This trade is still at this point positive theta, so it is decaying slightly in our favor right here at $8 a day. But if our market were to move up any further here, I'll need to do an adjustment on this, most likely rolling out this call spread and getting this call spread, at or above the current market. This is a bonus trade that I did on DocuSign. This trade is an earnings trade. It was profitable the next morning right after the earnings announcement, but the market moved quickly against it. I took off the short puts. This was a calendar spread. I took off the short puts at full profit. Now I have the long puts that are close to a full loss at this point. And again, this trade had very low risk. This trade had about $180 in risk or so in it. And right now I'm virtually at that full loss. So these longs expire this coming Friday. What I'm looking for in this trade is potentially a little bit of weakness, a little bit of pullback to come into this trade. If that were to happen, one of two things can happen. One, I simply close out my long puts for a profit. Or if the market were to just start to come back, but not come back very much, I could maybe sell some short puts against those current long puts that I have in there and get a little bit more credit coming in to help offset this loss or possibly even work into a gain. Now, this particular trade down here, we're only 13 days into this trade. This is a much longer term trade. I love it. moving nicely, just the way we want. It's decaying. It's moving into some profitability. So again, I like everything about this trade. Just going to leave it set here, do its thing. This is a SPY trade that I put on with the premise that our markets were at a high and likely not going to go much higher. Now, we'll need to see how next week here plays out, because if our markets do start to aggressively move up, I'll need to do something with this trade. My premise is still that we're going to be in a little bit of a sideways chop here, which would be perfect for this trade to decay into, or maybe even a little bit of pullback would be better yet. So that's what I need to see happen on this trade in SPY. This was another bonus trade. This was a calendar earnings trade in CrowdStrike. I started this trade about 2 weeks ago. The trade did go against me after earnings. That is one of the nice things about specifically doing calendars as an earnings trade, is it gives me time to adjust and sell additional short strikes against my further dated long strikes. Those of you that have taken the deep dive calendars and diagonals course understand this well at this point. If you haven't taken that course, it might be a little more elusive to you as far as exactly what happened here. But basically, I had on a calendar which is shorter dated short puts in this case, and then longer dated long puts. And we look for the short puts to decay right after that earnings announcement, which they did. But the longs also decayed because CrowdStrike jumped up considerably, not unlike what happened here. But what I was able to do, because my longs were much further out, they were about 2 weeks out, is I've been able to sell short strikes against my long position for a couple of weeks now, bringing in some additional profit into this trade. So I do plan, this trade started off, it was about a $300 loser almost out of the gate. I've been working it back into a profit. If CrowdStrike kind of holds in this general area of the 237 up to 255 or so here this next week, I should be able to pull this off for a fairly decent profit, maybe by Tuesday, Wednesday at the latest. So that's going to be my game plan on the current trades that I have open. And I may look to open another longer term trade, not unlike this one, here maybe mid to late week this week. There's a couple things that are going to be happening this week. I believe Jerome Powell, Fed chair, is going to speak again, and a couple economic reports. So would like to see how those hold up in the market at this point. And then if we take a look at our market, take a look at a chart, get my face out of the way here. So this is a chart of the SPX. You can see we've gone through some really big waves, if you will, in the market over the past few weeks. If I put on my drawing tool here, we can see that we had a large down move here a little over a month ago. And then almost instantaneously, this massive up move where we stalled a little bit here, and then we literally gapped through it and ran. That's a gap and run is what they call that. That's a very aggressive up move. We can see that our volatility has dropped considerably here. Volatility is back to close to all-time lows for the year. And our markets, of course, are at virtually all-time highs for the year. If I change this, let's see, turn off my tools here. If I change this to be a weekly chart, we can see that we were actually higher back in December of last year. We were all the way up here to 4,800, where now we are at 4,600. So we are approaching all-time highs. Again, seems a little bit unusual to me because of the different things that are in play out there. You've got the political climate, the war in Israel, war in Ukraine. Interest rates are still high, but there's indications at this point, different economic reports that are kind of telling the general trader that the Fed probably won't be raising interest rates again, and may very well be lowering interest rates here over the next few months. So that's kind of what's fueling this, along with, the big 7 stocks that are largely being powered by AI, your Microsofts, your Apple, your Nvidia, Adobe, drawing a blank on what a couple of the others are, but a lot of these stocks have had massive run-ups, and of course they're large contingents in the marketplace, and they are pulling this market higher. Now, there's a lot of stocks that aren't making these types of moves as well, but because the ones that are making the moves are significant market cap, and they play a large percent of the indexes, the S&P, etc. That is what is basically pulling this market higher. So we can also here take a look at, I want to take a look at the VIX. And we can see that our VIX, our volatility index here, is literally coming down here at all-time lows for the year. And in fact, let's just see if we take this to a 3-year, it's lower than it's been in 3 years. Again, this is a little bit, I don't know, I would not normally expect this going into an election year, with all of the political volatility that's out there, the wars, etc. Just seems very unusual to me. But that is what the market is telling us, is that people aren't afraid of the market right now. They're not buying insurance. So, they feel that everything's hunky-dory and this is where we're at, and our market is likely to go higher from here. That's kind of what this is all telling us right here, right now. So my expectation would probably be to get a little bit of a sideways chop here. Just because we are at this resistance area. But again, the market has not been respecting resistance areas very well recently. But I would still, personally, I feel like, let me put my tools on. Wrong one. Well, I guess we could do that too for hitting new highs for the year. But I am expecting a little bit of, most likely, a sideways chop, possibly a little bit of a pullback. Probably not a lot of pullback, but maybe a little bit of a pullback here into this, 45, 50 range, somewhere around there, and then probably moving up from that point. Now, the other possibility, because volatility is so low and there seems to be a strong sentiment right now of a strong market, if we bust through this level and we hold above that level for a day or so, it's not unrealistic that we couldn't, get a gap like this, another gap, and then run all the way up to the old highs in the 4,800 range. So it's for that reason that I'm being a little bit careful right now. I'm keeping the number of positions I have light. And, the last thing you want to do, particularly in delta neutral trading, when you're trading delta neutral, when you're trading basically selling options premium, and you're in a market like we're in right now where, volatility is as low as it is. When volatility is low, the price of options is much lower as well, because there's no fear of volatility. Nobody's bidding them up. So if I'm a seller of those options, this is not a great time to sell. I'm not getting top dollar for my product. So I do want to have positions on, but I want to make sure that I'm keeping a lot of powder dry on the side. I want to be able to, when volatility starts picking up, I want to be able to then come in and start selling those options at a little bit more of a premium price. So if we take a look at our current positions, that's why really we have on this position that has some risk in it, this position that has, this is downside risk, of course, this position has upside risk in it, this position tucked away in the corner here has some downside risk to it as well. So we really only have on basically 2 positions with downside risk, 1 position with upside risk. This position will likely be coming off soon. That we're somewhat balanced right now in our delta neutral trading. The wheel here is a totally different type of trade. So again, it's designed, while it is positive delta, it is a directional type of trade. It's something that students wanted to see me make and wanted to see it play through the process. So this thing's been open, 142 days, and we just keep selling. At one point we were selling puts against it until we finally got assigned Google, and now we're selling calls against it. So this just kind of shows how that wheel process works. But anyhow, that should give you kind of a good sense of where we're at right now. I think we're relatively balanced in the positions that are open. And again, I want to be very careful not to have too much one-sided risk at this point when volatility is so low and I am not getting a premium to get into these trades. So that's going to be it for today. Thanks so much, everyone, for checking out the weekend update here on December 10th, 2023. Take care.